Let's be real, order flow looks terrifying. You open a depth of market or a footprint chart, numbers are flashing everywhere, colors are changing, and it feels like you are trying to read the matrix code while skydiving. Most traders give up on it because they think they need to track every single tick in the stock market. But what if I told you that 90% of the data that you see in the market is noise? What if I told you there's just one concept, a single dynamic that acts as the God concept over almost all other order flow strategies? If you understand this one thing, you can ignore the flashing lights and spot exactly where the big players are trapping the retail crowd. Today, I'm going to show you the absolute simplest way to read the order flow, the best bang for your buck strategy. We are cutting out the noise and focusing on the one thing, the volume anomaly. Let's dive in. I personally call this concept action versus reaction. To understand this God concept, we need to understand physics, specifically cause and effect. In trading, we call this action versus reaction. Action is the volume, it's the effort, the aggressive buyers and sellers hitting the market orders trying to push the price in one direction or the other. Reaction is what price actually does. What happens on the price action? Does it move up? Does it move down? In a normal market, high action equals high reaction. If massive buying volume comes in, price should shoot up. That's normal. That's healthy. But that's not what always happens. We see a lot of anomalies in the stock market, and I call these volume anomalies. We all know Newton's third law of motion. The most fundamental rule of physics: for every action, there's an equal and opposite reaction. For example, if I push this table, it pushes back. If you throw a ball, it bounces. Effort equals result. But here's the problem. The market does not obey the laws of physics. In fact, the most profitable opportunities in day trading, personally for me as well, happen exactly when Newton's third law of motion is broken. This is what I call volume anomaly. A volume anomaly is when you see massive action on the order flow but no major reaction in the price action. Think about it. If you see thousands of contracts being bought aggressively at a specific levels of significance, which I talked about in one of the previous video, I'm going to link that video in the description box below. You see aggressive buying on the Bookmap or the footprint chart or normal price action chart that you can see on the volume bars as well, but the price refuses to take up even 1 point. What is happening? It means someone bigger is sitting on the other side, passively absorbing all that aggression. The aggressive buyers are putting in maximum effort. The effort is there, the action is there, but no reaction in the price action. This is your tell. That is the anomaly. And that is exactly the moment the market is about to reverse. Let's try to understand this concept with the help of first example. And the first example is going to be the easiest example. You can spot this strategy almost every day. And I'm going to take an example of just a normal price action chart with volume bars, which you can find on TradingView or any other free charting software out there. As I mentioned, it's going to be easier for you to spot these strategies, the order flow strategies, if you're looking at Bookmap or the footprint chart. But saying that, I understand these applications are expensive. When I started out trading back in 2019 and 20, I didn't have $220 or $250 to spend to invest on a trading platform. So I just started with the normal price action chart. I started with Dash Trader Pro looking at level 2. But eventually, when you start making money from trading, it's better to invest back in the business. And that's when I started using Bookmap and the footprint chart. Specifically, I use Bookmap. You can spot this strategy on the normal price action chart as well. But if you want to grow and if you want to take it to the next level, you can try out Bookmap. We actually have affiliation with Bookmap. There will be a link in the description box below and you can save a bit of money. Now let's take a look at the daily chart of MU, because I always mention that order flow without technical analysis is nothing. That's why I discussed the level of significance in one of my previous videos as well, because you have to look at the order flow near these levels of significance. So MU on Friday 16th of Jan was gapping up above the prior all-time high, and because of what is happening with AI, these memory stocks like MU and Santis, they have been on an insane rally recently, so the overall sentiment has been bullish. On this day, we actually gapped up. Where we gapped up to? Right above the prior all-time high, which is really nice. So now let's take a look at the intraday price action and see the Camarilla pivots. I also made a video on Camarilla pivots as well. So everything I talk about in this video, if you have any issue understanding one of these concepts, you can just go on my YouTube. I'm going to link the Camarilla pivots video in the description box below, and also the level of significance video. So on the Camarilla pivots, we actually opened above R6. And if you guys know from that video, the Camarilla pivots video, we are in the overdrive zone. So there's a very high chance it's going to push towards the upside. We are in the overdrive zone, so we might continue the push towards the upside. And you can actually see how it respected R6 all the way towards the close of the day. We can see that we had a push from R6, consolidated near R6, and eventually closed above R6. So we just stayed in the overdrive zone for the whole day. So on the 5-minute chart, we can see that we gapped up. Let me add the pre-market action as well. In the pre-market, we can see that how it respected R6 again. This is the beauty of my YouTube channel. You can understand all these concepts for pretty much free. I discussed this exact concept. We had a push towards the upside, pull back to R6 for a push towards the upside again right off the market open. So at the market open, I did not trade this stock personally right off the market open because I don't like trading the stock MU overall. It's in my shit stock list. I have a list called shit or stupid stock list. I discussed that on the Off the Charts podcast as well. That is a new podcast we started. I'm going to link that channel in the description box below as well. I discussed that MU is in my shit stock list. Even though I love the setup on the daily chart, it was opening above R6, satisfying all the criteria of a playbook setup. I still wanted to wait it out of the open because I personally don't like trading MU a lot. But now what happened? After the open, we had this insane rally towards the upside. It looks like a small rally, but if I go from low of the day to high within the first 2 minutes, it moved $11. It's insane because that means it moved approximately 3% of the stock price within the first 2 minutes of the market open, and the ATR of MU at the moment it's $16, which is quite high because of the chip sector and the memory stocks on a rally recently, but it still moved approximately 70-75% of the ATR within the first 2 minutes of the market open, which is insane. My trade on this stock, I actually posted a live breakdown of this trade on my second channel, Awtani Unscripted. I entered my position on this pullback. I added right here because in most cases, when we have a nice move like this towards the upside, insane rally, $11 move, most likely, more often than not every time, more often than not, the first pullback likely gets bought back up. That's why I started a small position right here on the pullback. I added right here when we saw a push towards the upside right here on the order flow. But we can see that high volume push towards the upside. This example is very easy, just focusing on the candle bars right here, the volume bars at the bottom. Had a push towards the upside on high volume, expansion on high volume, compression on low volume, consolidation on low volume, which is nice price action. Then we had another push towards the upside on high volume. The volume increased. Then again, consolidation on low volume. But now this is the volume anomaly. Finally, we have a break towards the upside. I could see that on the Bookmap as well, but I won't show you guys Bookmap because this example is mainly for traders who don't have Bookmap, but you can also spot action versus reaction on the price action. We saw insane action right here. The high of this candle is 364.67. Now, if you know the basics of stock market and the order flow, we can expect a big order at 365. This candle did not even break 365. We had high volume, very high volume, a lot of action from the buyers, but the reaction was it barely broke above high of the day. We can compare this volume to this volume as well. This volume was actually lower than this volume, but it still moved nicely. It moved we can see that it engulfed the previous bar. We had a good push towards the upside. This was the start of the next push towards the upside. But right here, it barely broke above high of the day. Very small green candle, not a very big candle, not very small as well, but it's not equal to the action. Every action has equal and opposite reaction. Action was there from the buyer, but it barely broke above the prior high of the day, and that was even before 365. So now, to fill that order at 365, we will need more volume. That means we need a lot more buyers, and the sellers are now slowly coming into the picture, especially knowing that it's above R6. It has moved approximately 70-80% of the ATR already within the first 2-3 minutes of the market open, extended on the daily. So we are using the overall market context to our advantage. That's where I knew that, okay, it's not going to continue towards the upside, and that's where I covered my whole position. I was holding like a few contracts where I covered my whole position after seeing this volume anomaly. A lot of action, minimal reaction. This action is not equal to the reaction. Again, on the price action, it's a bit difficult to spot, but if you see Bookmap, if you have footprint chart, these platforms just make it 10 times easier for you to spot absorption and all the strategies surrounding this God concept of action versus reaction. Let's now take an example of Tesla, and with the help of this example, I'm going to explain how you can spot action versus reaction on the Bookmap, which is very easy to spot compared to just raw price action. On the daily chart, we can see that Tesla has been going down. We have to look at the overall market context. That is what I preach. That is what what I teach you inside the Summit Academy. We had a push down consolidation, push towards the downside. We can see red candles on high volume. December anyways is a low volume month, so it's higher for December, but we can see push down, green candle, low volume, relatively speaking, low volume. Then we had a bit of consolidation, another breakdown on high volume followed by consolidation. On this day, we gapped down. It's very important to note where we gapped down to. Overall market context, this is a very major trend line on this stock. It's been holding this trend line for the past 1 year approximately 10 months since April 2025. We can see 1 test, 2 tests, 3 tests, 4 tests, 5 tests, 6, 7, approximately 6, 7 touches on this trend line, which is really good. I don't like trend lines where we only have 2 touches. So basically, it's been making higher lows on the daily chart for the past 10 months. So now on this day, we were gapping down right near 425 and 420 zone. And coincidentally and conveniently for us, this is a level of significance. And if you guys watch my video, I posted on level of significance. We can see that we have multiple low of the days. Push towards the upside, support right here, low of the day, support, low of the day, high of the day, resistance right here. So this is a major zone from 420 to 425. It's a major level and zone of significance. And we are near this trend line as well. So on this day, I was watching this stock for both the directions, because even though we are gapping down to a major zone of significance and near this long-term trend line as well. So now let's take a look at what happened on the 5-minute chart. We tried to push towards the downside on the 5-minute chart. The first candle closed like a doji, I would say a bullish doji, very high volume. Red candle on low volume. So if you want to push towards the downside, we want to see an increase in volume on the red bars. It's pretty low for a further continuation move towards the downside. But then now what happened on the 1-minute chart? Before the 1-minute chart, I'm going to show you Bookmap, how you could have used Bookmap to spot action versus reaction. So here we have Bookmap on the left-hand side and the price action on the right-hand side. We can see that we've had a push towards the upside. We got rejected from these Camarilla levels. We have S3, S4, S6. We got rejected from S3. We can see that we never closed above S3. If in fact we close above S3, we might actually go all the way to R3. That's what happened later in the day. We closed above S3, went all the way to R3, and then eventually we actually pushed towards R4 as well. But you could have spotted this low of the day, this 425 on the price action and the Bookmap with the help of action versus reaction. But this is again a combination of Camarilla pivots, overall market context, and order flow to catch a really good trade, or maybe to avoid a fake out towards the downside. A lot of people were watching this stock for downside. They pretty much got faked out. So now this is where Bookmap is more important than the price action, and this is where this platform pays for itself, because based on the size I am taking at the moment, if I am able to avoid one downside trade like this, avoid a fake out because of Bookmap, it pays for itself. Right? That is why it's important to invest on your own business, in your own trading, when you actually start making money from trading instead of buying Lambos. So right here, we had a push towards the downside. Now, even though this volume right here, right before 425 was low, but there was still action, but no reaction. We had some sort of absorption right here, which you can see from the Bookmap. So now this is the 9:41 a.m. candle. This is where the last time we saw action from the sellers and reaction on the price action. This is this candle, 9:41. We pushed towards the downside. We closed under S4, which is important. We went for the retest of S4 and pushed towards the downside. So I'm going to play this Bookmap now and see what happened. This is at X4, X8 speed. I am, as a trader, watching what happens near 426, 425, because personally, if sellers are able to push it back down under 425, then most likely we go for the break of low of the day for S6. And we can see that low of the day is near S6. We haven't closed under S6. We haven't been in the overdrive zone. This is the opposite example to what we saw on MU, the last example. We bounced off S6, S3, S6, S3, S4. Eventually, we had a confirmation for a hold above S3, for a push towards R3 and R4. This is just using Camarilla pivots. It's an indicator. Again, these are levels. It's not like you are supposed to revolve your trading around these indicators. No, but it's a good guide, right? If I'm taking it for the break of low of the day, might as well wait for S6 instead of trying to short it right at S6. That is my thought process when I look at Camarilla pivots. On this candle, I'm like, okay, if we retest S4, I'm going to take it downside. And I believe I did. And I was able to cover that position for, I think, a small green, small red. This was a while ago. But then I saw what was happening on the tape. We can see that this is 9:43 candle. This is this candle. Even though this candle had low volume, we can see that from the Bookmap that we will have a lot of action from the sellers, but no reaction. First of all, we were trying to break towards the downside. New big buyer right here. This is what we teach in the Summit Academy as well. This is another strategy. This is not action versus reaction, but we are seeing a new big buyer right here. This buyer increased the position sizing from 7,000 approximately to 9,000. It was pretty much zero, maybe a few 1 or 2,000 shares, increased to approximately 9,000 shares, which is quite a big order before low of the day. 425 has 23,000, 426 has approximately 9,000, which is quite a big order. I don't want to see that before the breakdown of 425. So we can see that we broke down under 426, but no major big orders under 426. That is another level 2 time and sale strategy, that there was no acceptance under 426. This is what we teach you inside the Summit Academy as well, because I'm discussing one topic in this video, and this video is going to be like 15-20 minutes long. Inside the Summit Academy, we have approximately 2 hours plus of education backed up by real 5 hours of examples. So the Summit Academy, I'm going to talk more about the Summit Academy after this example. Let's focus on this example. Action from the sellers, no reaction. But now the opposite thing happened. We were looking at this trade towards a downside, but what happened? We saw action from the buyers and reaction on the tape. This is what should happen. So that means this is satisfying the laws of price action. Action has reaction. So the stock actually might go towards the upside. If we see a lot of times what happens on this pullback, this is this candle, guys. This is 946, which is this candle. 945 is this candle, this big green candle. A lot of times what happens, we see a lot of green right here, but it's unable to push towards the upside. That means we are seeing action, but no reaction on the price action. That means the price action wants to go down, because on the green candle, the action was there, but the reaction was not there. So it might actually reject. That means the buyers right here got absorbed if in case it doesn't push towards the upside. In this case, we saw green right near the fake out level, because you guys know a lot of people, if you have been trading for a while, this is a perfect reason for a lot of traders to sell their position, to short sell it for a push under the low of the day. But what happened? We saw green action and reaction on the price action. This is good. This is not the anomaly. That means this stock might actually push towards the upside, and that is what happened. We saw this green buying right here. Then we had new seller right here. This seller still expects that, okay, the stock might go down. We saw action, reaction on the price action, another round of action and reaction on the price action. This is the healthy price action. This is not the anomaly. Anomaly was right here. We saw sellers coming into the picture, no reaction. That means it might actually not go down. This might be the spot for reversal. That is what we talked about at the beginning of this video. And now after this action, no reaction, the volume anomaly, we saw action and reaction on the price action. This is healthy price action now. Green candle, high volume. Red candle, low volume. Green candle, again high volume. That means this stock always wanted to push towards the upside, and we actually closed near the high of the day. And with the help of order flow, the Camarilla levels, action versus reaction near this 426, and then the buying action came in with the reaction on the price action. You could have actually spotted this earlier on in the day around 940, 945, that this stock doesn't want to sell off. So if you're thinking of taking it towards a downside, might as well wait for a hold under 425 or S6. If this concept clicks for you and you want to go way deeper into the strategies like absorption, exhaustion, ladder support, resistance, big bid, big ask, big orders, volume profile, everything, you need to check out the Summit Academy we recently launched. We launched like a week ago. We already have a lot of members who are actually doing well. I'm going to show you one example of a member who joined on Sunday, and on Friday, the same week, he caught like a 300% trade. So we have the Summit Academy. The welcome includes the welcome. It explains you the platform. Orientation actually has how to open an account with any broker you want, how to set up your platform. So we cover everything, whether you are intermediate, beginner, or advanced trader. Then we have the Summit Academy core right here. We have approximately 11 hours of education just talking about the concepts. We have approximately 2 hours, 13 minutes of order flow concepts, not examples, just the concepts. And the last section, the mental summit, is actually the best section, which is on trading psychology. It's amazing. Like what we have worked on, I'm actually proud of it. And now once you understand these concepts, 11 hours of just the concepts in the stock market that I have been using for the past 7 years, I have learned in the past 7 years. You can apply these concepts in the trade dissection room. We have examples that we have a concept called the reload, the refill mechanism. You can actually look at the screen recording, the real life executions, how I applied these concepts we talk about inside the Summit Academy, and learn from them with the help of real life examples. I'm so proud of it that one of the members, he joined on Sunday. On Friday, the same week, he completed the course and he caught a move on AMD from 234 all the way down to 229. The premiums moved approximately 300%. He paid $1 for the premiums and he covered the position around $2.4, $2.5. And also also, not only that, he was able to apply the order flow strategies to catch the low of the day. I actually saw the bounce from 229 as well when the sellers couldn't break that 229 barrier. So we applied the strategies we talk about inside the Summit Academy and made money in the next 4 or 5 days. So if you guys want to join, the link will be the first link in the description box below. We recently launched, so we have a few launch bonuses going on as well. The link will be in the description box below. And finally, in this video, we discussed that order flow doesn't have to be scary. Don't let the gurus overcomplicate it for you. Forget trying to read every number. Just look for the lie and the truth on the tape and the order flow. Look for the moment where the effort doesn't match the result. When you see high volume action but no price action reaction, you have found the anomaly. That is where the edge is. If you found the simplified approach helpful, let me know in the comment section below. Like this video, subscribe to my channel, subscribe to my second channel as well for law live trading recaps. I posted the MU trade recap on my second channel as well. Thank you for watching, and I will see you guys in the next one.